All right. So welcome everyone. एक और market trap with Pankaj Pandey sir. Sir, this week we saw another all-time high in the market. Although थोड़ा रुक के आया Monday to Thursday, it made us wait, but then we did see new highs. So what happened there, sir?
I think, hi, good evening, Vishu. See, when you look at markets, I think clearly the highlight is, or the talk of the town is the rate cut hopes, both domestically and globally, especially globally, because I think there were a lot of volatile data which created that confusion that probably US is headed for a hard landing. But overall, numbers have been okay, and now sense is that US is comfortably placed to sort of do a 25 bips kind of a rate cut, and that's a sort of a lot of a comfort for the markets there. And obviously, we have a positive above there because it drives the risk on sentiment, and which is why if you look at banking, which has been a laggard, really lifted the Nifty this week. On top of it, your big boys like even Reliance also sort of did very well, despite the fact that gross refining margins are soft. Because the inflows were quite robust. So while domestic inflows have been definitely been robust for a good period of time, I think since probably till September 12th, we have seen about 20,000 odd crore kind of a flow on the FII. And largely, this flows of goes into key sectors like IT and banking, and I think these are the two sectors which were really not performing or not really contributing to the Nifty. And which when these sectors have started to sort of contribute, I think what we get is a new high on Nifty. And while domestic inflows are good, so which is why the mid caps and small caps also continue to sort of make a new high. And our sense is that with the rate cuts, expectations sort of setting in, banking, IT, and metals to some extent because of the news flows, I think these are the two, three sectors which are going to be there in the limelight. And I can't forget the fact that the crude oil prices have breached $70. I think which is a big macro positive for us because I mean crude oil import net import bill is in excess of 10 lakh crores. I mean that is a similar kind of a capex what the government does. So it's a massive number. So if we get relief there, it's a big macro positive. So the market making a new high is a combination of all this. And our sense is that 25,800 is what we would watch out for the next few weeks, and support could be somewhere about 24,750. But next 1 year, we've put a target of 27,500, which is a low double digit kind of a return in the markets.
Right, right, sir. So I think another big news this week was that people were looking forward to was our own inflation numbers, and which has come just marginally higher than the expectations at 3.65. So how are we looking at this now?
I think, Vishu, if you look at what RBI is projecting is an inflation of 4.4% for the second quarter. You already have inflation reading of 3.65% this time and prior month 3.6%. And the expectation is the inflation is going to be about 5% next month. So if you sort of do aggregate, you are still going to get an average print of somewhere about 4.1%, which is still lower than or 30 bips lower than the RBI own inflation projection. So we are quite comfortable from an inflation perspective, and which is why the yields have also sort of come off. And I think all eyes are on Fed in terms of cutting rates, and subsequently our sense is that RBI is also going to probably follow suit. Initially, they will sort of change the stance, and then later on, our sense is that towards the later part of this year, we could get rate cuts if everything goes well. And I think monsoon also has been progressing quite okay.
Right, right, sir. Sir, I think one more factor that may have contributed to us seeing these highs is the regular inflow of SIPs from our retailers. So, can you tell us, can you shed a little bit more light on this? How we have been progressing there?
So it's not just a factor; it's a very big factor that way. So when you sort of look at monthly inflows, continue to be very robust. So while there are a lot of NFOs which get launched, so we sort of exclude the NFOs. The inflows in the August is again at a lifetime high of 27,200, and this was 23,400 a month before. And if you sort of include FNOs, NFOs, then that is somewhere about 38,000 versus 37,000. And I think what also could have happened is that in August, early part of August, we had seen a market sort of dipping. So, and typically the tendency is to sort of buy more or buy on dips. That is what has been the trend which we have seen. So that is also sort of helping. And I think one clear trend is that if you look at, say, inflows, average inflows this year versus last year. So from January to say August, we have seen inflows of 22,200 crores, which is 2x of the previous number. So previous last year, same comparative number is 10,400 crores. And small caps continue to get 3,000 crore kind of inflows. I think mid caps also are clearly doing. I think one big positive which has come in is that the inflows in large caps have been better. But I think the bigger picture, if you look at, is that the sectoral funds continue to sort of garner lion's share. So there you are easily getting 8 to 10,000 crore kind of inflows. So basically, if you look at our sense is that see, IT and banks were not really doing so well, which is where probably the inflows were not coming prior to that. Now we have seen this pocket sort of doing well, which is why we are seeing inflows in the large caps. And sectoral funds did well over a period of time because people didn't wanted an allocation for say IT and banks, which is typically a sector which they have already been exposed to earlier. So there, the ownership is not really an issue. So I think from that perspective, now you're seeing a very healthy trend across segments of the market, and I think cumulatively inflows are about 2.6 lakh crore, which is quite massive.
Right, absolutely, sir. So, I think another big headlines that were there this week was around the government initiatives. A lot of initiatives were rolled out. Uh, I think one of the biggest was the PM E-Drive announcement with a focus on renewable energy, green energy, electric vehicles, and so on. So, how do we see this impacting our markets?
So auto is a very important component from the perspective that, see, it is one of the biggest contributors to GST. And the manufacturing, they are a big contributor. And auto has already seen two rounds of FAME 1 and FAME 2 scheme. And there was an anticipation of FAME 3 scheme, which is now being launched, which is now called PM E-Drive scheme. Now the allocation is 10,900 crore, and that is for 2 years, which is quite impressive. What they've clearly excluded is the four-wheeler as a segment, because I think that is where one segment where probably you don't need to sort of push for incentives. I think two-wheeler is a bigger consumer of oil and gas than four-wheelers, and which is where I think the bulk of the allocation is going towards that. And I think there is a good amount of allocation toward buses because buses are also one segment where things have yet not sort of picked up. And I think beside that, one key focus has been the focus on the charging infra, because that has been one of the key missing links overall. And that is where I think the policy addresses it aptly. And I think typically when you are sort of incentivizing, say, two-wheelers or four-wheeler or three-wheelers. So, for example, for two-wheeler, what you're giving is the subsidies is capped for say 10,000 rupees per vehicle. So you're giving about say 5,000 rupees per kilowatt hour. Typically, a two-wheeler is a 2 kilowatt hour kind of a. And so that way, I think it is lesser than what historically has been given, but I think it is decent enough or good enough from the industry perspective. And I think one key concern earlier was that when you look at the state or public transport authorities, I think largely when they used to sort of buy buses, typically the OEMs used to sort of supply buses on the gross contract basis. So basically they used to run these buses for 10, 12 years. Now, one obvious concern was that some of these state public transport entities were not really financially well off. So OEMs always had a concern whether they are going to get their payment because you are really running the buses for 10, 12 years. And which is why they were asking for a security mechanism, which is what has been provided here. The allocation is about 3,435 crores. So I think it addresses most of the needs of the industry, and I think overall we are our sense is that this strategy or this overall announcement by the government is a step in the right direction and largely meets the expectation of the market.
Right, sir. Sir, talking about sectors, I think metal index was up quite a bit, almost 2% up this week. So, what led to this, and what's our outlook on this?
So a lot of news flows in the metal. So one obviously is China. So China has been sort of troubling the entire world with volatility in growth rates. Now, and they've been coming with stimulus package. Now, what is anticipated is that they're going to offer a kind of a rate cut to the home loan borrowers there. And so definitely it is going to boost their overall market and will have a positive rub off on the commodities. So that is sort of helping. Then I think government is also realizing that the China, because of slower growth, has been sort of dumping commodities. So which is why they have put anti-subsidy duty or countervailing duties on the stainless steel products. Not on the entire steel range of product, but it's a good beginning to sort of to have this. And then I think there was one concern that with the Supreme Court ruling that if states are allowed to sort of tax minerals, then it could sort of create disparity between states because if a state is rich in a certain mineral, they could really sort of tax it in a big way, and that might create a volatility in terms of the overall cost structure, and which is where I think the central government is looking to sort of curb that and probably bring in some more, or is going to sort of challenge that verdict. So that is another, and I think one of the key concerns with say a big sector like say cement and steel is that they are big polluters, and steel specifically. So government has come up with a policy in terms of producing more of green steel. So as a part of that, the overall they've come up with an estimation of nearly 75,000 odd crores to sort of increase the renewable energy penetration from say 7% to 43% by FY30. And I think since they consume a lot of coal, so green hydrogen is also being talked about. So, so there, the overall transition cost is going to be about 12, 13 lakh odd crores. And once that happens, the overall emission is going to be 30% lesser. And one key that countries or regions like the EU is planning to sort of tax steel if it is not produced through the green route by putting extra duties. So I think industry need to sort of transition towards more on the greener side. So I think after a long period of time, metal is seeing some bit of a positive incremental news flows. Otherwise, the prices are at a 3-year low. So some respite there, and which is why I've seen that bounce in the metal. I think if we build further on this, then probably we can say that these are early days for reversal of the metal as the overall pack. But it is still wait and watch at this point in time.
Right, sir. Sir, US has also passed, I think the state of representatives have also passed the US Biosecure Act, which, as per my understanding, it's going to further widen the divide between US and China. How is it going to impact us?
I think it's a blessing in disguise for us. It's going to impact us very positively. In fact, a lot of our recommendations have been on these lines in anticipation of this act, because understand this: big global companies spend 18 to 20% of their top line in developing new products, and which is why they outsource some part of that activity to foreign players. And China has been a sort of a big contributor. So Chinese CRAMS industry is somewhere about $25 billion in size, and we are currently at about $7 billion in size. And I think the big concern in US is that one, that there could be a challenge in terms of theft of IP, and also there was a concern that the genetic information of US individuals can get passed, so which is where the challenge lies, and which is why this law has been sort of passed, though it's still not a full law because it needs to go to Senate for passing. But our sense is that it's more of a procedural because largely it is getting both the support of parties. Now, once this happens, you have a grandfathering clause of 8 years, and after 8 years, the companies or the US companies necessarily need to sort of divest from there or disengage from Chinese players. And the Act clearly mentions some of these big Chinese companies like Wuxi Biologics and some of them. So I think it's a blessing for us for the CRAMS industry, because CRAMS industry has been doing good amount of capex. Companies what we track, they have done capex of 10,000 odd crores in a period between say 21 to 24, and that is not a period which has been productive for them, and which is why we feel that this segment has a lot more runway for growth. And I'm not surprised that companies like DVC, Syngene, Piramal Pharma, Hykel, JLS, they've all done very well from a price perspective. And you might have also noticed that Piramal Pharma, Hykel, GLS, I think we've been given by and have been raising targets for some of these companies for quite some time. Continue to like all the names I mentioned. And I think after 2030, probably the action or the size is going to be even more bigger.
Absolutely, sir. Sir, talking about let's talk about insurance segment. Could you tell us a little bit about the trends that are there in this segment right now?
So you see, we should divergent trends. So अगर आप motor segment में देखेंगे, because we all know that probably last 1 or 2 months the auto sales have been muted. So clearly, if you look at in the general insurance segment, there is a moderation you see in terms of growth. So for example, the general insurance industry recorded a growth of some 4.5% in the month of August. For full year or April to August, it's about 10 odd percent. And what is doing well is the health side of the business and not the auto side of the business, and which is there for most of the players. So for example, Star Health has seen a growth of say about 15 odd percent because it is a purely health player. Lombard is in both the segments, so it has seen a growth of 10%. Our sense is that this is more of a temporary, and I think overall, once the because we are entering into festive season, and that is where things could accelerate, and which is where we feel that whatever moderation in numbers you are seeing is a sort of is more seasonal or has got to do with a certain time frame. Because when you look at the growth on the life insurance side, you continue to see a robust growth of 22% for August, and from April to August, its growth has been about 20%. So from that perspective, you're seeing a pretty healthy growth there. One obvious disappointment is that you had this GST meeting, and GST meeting has postponed the decision on cutting the GST rates from say 18% to 12% to the next meeting whenever that happens. I think it's happening in November. So that is causing a slight bit of a disappointment. Otherwise, the insurance industry, after a long period of time, has started to sort of regain the growth rate, which is what is expected to do. Some bit of a concern still remains because on the surrender guidelines which have been given and which are going to be effective from October this year, we are still not very sure in terms of margin trajectory getting impacted, but there'll be some impact on margins. But overall, industry is sort of recouping up very well, and hopefully, in the festive season, you will see all the segments of the insurance industry doing very well.
Right. Absolutely, sir. Sir, finally coming to the hidden gem of the week, what will it be this time, sir?
So I think I'm still skeptical in terms of giving a company which where the fortunes are tied to global cues. So I'm still going to prefer a domestic company oriented company. So infra is something where our sense is that see first half or up till now we haven't seen much of an announcement. Second half ideally should see far more better announcement. On top of it, if US Fed goes in for rate cut, typically it also sort of opens up the window for RBI to cut rates. So infra companies, our senses should do well. HEG Infra is one company which I would recommend with a target price of 1885. And now it's a Rajasthan-based company. 60% of the book or the order book is from the railways, from the road, and the balance coming from railways and road sector. Historically, they've done very well, growth rate of 20%, revenue 30%, bottom line. Order book is healthy at 15,500 odd crores, which is 3 time book to bill ratio. And company is expecting about 11,000 to 12,000 crore kind of order inflows. And I think our sense is that they can deliver about 18-20% kind of a top line growth, and margins would be stable at 15-16 odd percent. And bottom line growth could be about 22 odd percent. So I think infra in the second half, given the announcement, should do well. And HEG has a decent track record of delivering very well in the last few years. And so in the second half, with more announcements anticipated, I think this stock should do well.
Awesome. Well, that was amazing, sir. Thank you so much for that. Thank you so much, everyone, for joining in. Please, if you have any questions, do comment them down. We'll try to take them up in the next session. So again, thank you for your time, sir.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.